Hello, everyone. This is Dave Gilreath at Sheaff Brock Investment Advisors. Remember, we are the firm that uses innovative portfolios to solve your investment needs. We provide them for intelligent investors like you. Today, we're going to talk about inflation. Inflation is top of mind. This week, I got a call from a precious metal salesman out of Denver. He was very persuasive. He wouldn't let me off the phone, and I didn't end up buying any metals from him. But he was a very persuasive salesman, and I thought, if I'm getting a call like that, then you probably are too. So let's talk about inflation, the best way to invest for it, what might be the best hedge. People are all about gold now. There's a lot of advertisements for gold on television, and so let's just talk about the best way to do it. So inflation right now is getting a lot of press, right? The consumer price index was reported about a week and a half, 2 weeks ago, and all of a sudden the news is just grim about inflation. And the consumer price index, which is what gets all the headlines, was up 5.4%. So the Fed, however, doesn't use the consumer price index. They use the personal consumption expenditures number, PCE. And that one was only up 3.6%, but still, it was a big number. It's the biggest number it's been in 20 years, and there was a lot of consternation about that and a lot of headlines about it. If you look at the PCE over a long period of time, it doesn't look quite as bad. It's still a big pop-up, but nonetheless, so all of this news is saying, oh my gosh, here comes inflation, and with all the money printing and is going on all around the world, and the free money that seems to be given out everywhere, then people are very concerned about inflation. So one thing that seems to be almost a given is that gold is the best inflation hedge. I mean, it's just a common thought that inflation is a well-earned reputation for hedging against inflation, and it's precious metals. And there's headlines of Germans loading up on it, or people buying it on TV. There's people talking about it, and charts are shown like the one on this page that shows that inflation has done so great for the last, or gold has done so great for the last couple of years, and that's just going to continue. That's the impression they make. So inflation, however, has come back. The poster child of inflation recently has been lumber. During the pandemic, the lumber mills shut down, and so all of a sudden lumber took off in price. You can see here, it's back to where it was before the pandemic even started. So some of the commodity type driven things have come back down and to kind of back to earth again. So Chairman Powell of the Fed says that it is temporary. Inflation is temporary. Well, the reason he says that, I think, is from this PCE chart that shows the monthly gain of the PCE going back a long time, to 2007. And you can see the chart hardly moves. I mean, the PCE goes up 1% or 2%, maybe, or 0 on any given month, and just goes along. And then all of a sudden the pandemic happens, and the PCE just jumps like crazy here on the right-hand side of the chart. And so it looks like a EKG thing popping up, and it's come back down now to almost to where, on a monthly basis, to where it was, back to the flat line almost. So I think that's why Powell is saying that it's temporary, and maybe it is. So if there is inflation, though, which many people are convinced about, one common thing is commodities. You got to buy commodities because they're a great hedge against inflation. Well, you can see on the right-hand side of this chart that commodities have done terrible against inflation for the last 5, 10, 15, 20, 100 years. Commodities have not done well. Bonds have done better than commodities, even though bonds are a fixed income investment. But the best, by a long shot, on the left-hand column, have been stocks. Stocks have done the best against inflation, especially versus commodities. So the one thing that the gold bugs are coming out of the woodwork, because gold has had a little bit of a run here, and recently, just in the last year and a half, as that one previous chart showed you. But if you look at this, gold really has had two major runs. I circled one there in like 08, 09, and then there's been one very recently. But other than that, gold has really has not done well. And over a long period of time, down at the bottom, it's done basically just as well as inflation has done. And so it hasn't kept up. I mean, it's kept up with inflation, but it hasn't beat inflation. By a long shot, the best thing against inflation has been the stock market. As you can see, stocks have gone up, 3 to 4 times more than the rate of inflation, and bonds have gone up 2 times the rate of inflation or more. So the lie, I would say, that gold is the best way to invest against to combat inflation is just false. It just isn't true at all. REITs have also done very well. If you look at that, REITs have done as well as stocks since 1975, when REITs kind of came into their own. But even in the last decade or so, REITs have done very, very well, especially against inflation. So I think some of the best quotes of all investing really come from Warren Buffett. But he talks about how gold is just a lousy investment. I mean, basically, we mine it, we smelt it, we pay somebody to store it, to hold it. It has very little use at all, except in jewelry for the most part, a little bit of industrial, but really very little use. It doesn't earn anything. It costs you money to hold it. It creates nothing, creates no value, unlike a company or a stock that creates earning, that can create wealth over time. But gold doesn't grow. As he said, if you own 1 ounce of gold for an eternity, at the end of the eternity, you still own 1 ounce of gold. Now, gold today also has competition. I mean, real competition. The millennial gold is Bitcoin, and other cryptocurrencies. And now you have non-fungible tokens popping up that people are buying, or art funds where you put a little bit of money and buy old masters art paintings or famous, even Banksy kind of art paintings, or you can buy vacation home pools, put in some money and buy a bunch of vacation homes that you hold for 8 to 10 years and then sell them out. So there's a lot of more liquid ways to invest than gold as far as inflation goes. Now, some people don't think there is inflation. Cathie Wood, who's sort of the hot money manager du jour, thinks that there is actually going to be deflation because there are a number of deflationary forces that are still in effect right now. And so she believes that deflation is the big risk. There are really 4 big deflationary forces that have come about over time. One is globalization of labor, which keeps wages low. Then you've got technology that Cathie Wood is all about, where productivity has increased. You have an aging demographic everywhere in the world. And the older people get, the less demand there is on consumption. And then you've got big debt all over the world. And debt weighs down on economic growth. Now, the one camp that is in the inflationary camp that wants inflation are policymakers all over the world, politicians. They want some inflation because they want to repay what they're borrowing today with inflated dollars down the road. So if you're in the inflation camp or if you're in the deflation camp, stocks and REITs are the best hedges against them. Don't let anybody tell you differently. That's all we have for today. Thank you very much for joining us.